Good morning. David McGard. This is Property Value. I talk about commercial real estate focused on South Florida. It's March 7th, 2022, Monday morning. Beautiful weather outside. Let's get into some headlines. First one's talking hospitality. Blackstone. Blackstone is still driving. Says Blackstone is still driving hotel portfolio deals as investors mull inflation war. Private equity giant completes $3 billion in transactions as a seller of Core Point Lodging and a buyer of extended stay properties. This is by Mark Heschmeyer of CoStar News. Two large hotel portfolio purchases totaling $3 billion wrapped up in the past week, both involving affiliates of private equity giant Blackstone Group, one as a seller, the other as a buyer. And while both deals closed out agreements reached in 2021, the market climate that helped generate the transactions is still in place and could spawn similar deals if macroeconomic factors of inflation and Russia's invasion of Ukraine don't diminish investor confidence, real estate executives told CoStar News. Affiliates of Highgate Hotels and Cerberus Capital Management completed their $1.5 billion acquisition of Core Point Lodging, of which Blackstone affiliates held about a third of outstanding stock and approved of that deal. Separately, Brookfield Property Partners reported closing the sale of its investment in an extended stay hospitality portfolio for $1.5 billion. A joint venture of Blackstone and Starwood Capital is the buyer. While U.S. hotel industry performance has been slowly but steadily recovering from the COVID-19 pandemic, the deals show the recovery of the hotel sector is on a much faster track. I quote, "I think when you look at the volume transactions last year was obviously strong. It was up almost 400% over 2020, but over a low number." Kevin Davis, America's CEO at JLL Hotels and Hospitality Group, told CoStar News in an interview. What is more impressive, Davis added, is the number of deals that were flying around and are still being worked on or considered. Driving the behind-the-scenes interest is the amount of capital available to invest. There was substantial amount of dry powder going into the COVID-19 pandemic, and substantial amounts more raised in the early months as investors teed up for potential distressed buying opportunities, he said. So the net is that you have a tremendous amount of capital ready to be deployed in the hospitality space, Davis said. You couple that with the specter of inflation now at 40-year high, which coupled with the fact that hotels can reset rates every night, that serves as a tremendous inflation hedge. I think that makes the sector much more attractive relative to some other commercial real estate asset classes. However, Davis said, investors are on high alert for potential macro issues surrounding the Federal Reserve's response to rising inflation and whether the war in Ukraine escalates. The market should hold up as long as we don't have extraneous events like a full-scale war to undermine market confidence, and as long as the Fed is deliberate and responsive in terms of raising rates, Davis said. The completion of the Core Point deal is a continuation of record mergers and acquisition activity among real estate investment trusts last year, according to Calvin Schoner, Senior Vice President of Research and Economic Analysis at the REIT Industry Trade Group, NAREIT. There has been a flurry of mergers, including deals going private, and I expect these may continue, Sherman told CoStar News in an email. There's a lot of money in the space these days. In the terms of acquisitions, property level purchases, 2021 acquisitions of $67.8 billion was the highest on record. With rising share prices giving REITs an attractive cost of capital, many are expanding their footprint. That appear likely to continue this year. There you go. Looks like the excuse me, it looks like the hotel hospitality is not only on a tear from 2021, but it's continuing to 2022. And that's a good thing. So, what's next? Got an ongoing, bring this. This is an ongoing battle in North Miami Beach. And I guess it says, headline from the Real Deal South Florida Real Estate News. This was written by Catherine Calergis. Judge pushes forward demolition of historic Duval Hotel in Miami Beach. Oceanfront building completed in 1957 has fallen into disrepair. So I talked about this before on this podcast. That says this is a real interesting because it seems like there's a lot of players and a lot of behind the scenes going on. It says the demolition of the historic Duval Hotel in Miami Beach is expected to move forward following a contentious court hearing. Miami-Dade Circuit Court Judge Michael Hansman on Friday denied a motion by the city of Miami Beach that could have forestalled the demolition by requesting additional evaluation of the structure and other measures. The judge ordered there be no further inspections of the property. The Duval's owner, an entity controlled by the Morello family, has been locked in litigation with the city of Miami Beach for years, all while the condition of the oceanfront 3.8-acre property continues to deteriorate. The demolition of the circa 1957 resort was ordered by Miami Beach building official in January after it was determined to be unsafe structure following a report submitted by the Morales family last year, the owners. Due to its historic status, the Duval would not be able to be knocked down, save for the unsafe structure determination. Preservationists, including Miami Beach Design Preservation League, have come forward with pleas to restore the property to its former glory. And I've commented on this before. I think that people should only be able to give their opinion on what should be restored if they actually have equity in that property and not be able to just be a third party saying, you got to restore it. Anyways, that's my opinion. Let's get on with the article. The league is pushing its appeal to the Miami-Dade County Board of Rules Appeals, according to attorney David Winker, and the league's executive director Daniel Seraldo. The city sought a court motion that would have allowed it to bring in experts to complete an independent evaluation of the property and to compel the owners to comply with the city code, seeking an after-the-fact certificate of appropriateness. This is a historic building in a historic section of town, said attorney Jeffrey Schneider, a managing partner at Levine Kellogg, and too many names to carry on with, who is representing the city of Miami Beach. This is a crown jewel in Miami Beach. It's not asking a lot to follow the process. But Hansman, who is also overseeing the Surfside condo collapse litigation, wasn't having any of it at the hearing at the Dade County Courthouse. The court is not ordering any further inspection whatsoever, and it's not ordering the defendant to do anything other than it already has, which is submit a full and complete demolition permit, Hansman said. Now, if the city elects to not issue a building permit, it will do so at its own risk and peril. But I am not ordering any further inspection of the hotel, said the judge. Schneider argued that the building official's inspection in January was a peer review of the Duval's owner's report, and that the Miami Beach Historic Preservation Board is entitled to request the city's conduct on an independent evaluation of the property. You're telling the court that its own building inspector did not have the prerequisite expertise to determine whether or not this is an unsafe structure, Hansman asked. No, she verified the condition of the building as reported by the structural report, Schneider replied. At one point, Hansman said, the city of Miami Beach was bending over backwards like a pretzel and that he found it very unlikely Miami Beach commissioners would spend a night at the Duval. My orders are not being complied with, and I don't know who's playing games here and what's going on, but it seems to me you're trying to backtrack your own building officials' clear and unequivocal assessment that is unsafe structure that needs to come down. Duval's Associates LLC, a company owned and controlled by Melinda and Richard Morello, acquired the hotel in 2004 for just $4 million. But the property is now believed to be worth about up to hundreds of millions of dollars if the owners sell it, depending on what could be built on the site. The Duval's attorney declined to comment on their client's plans for the property following its demo. During Friday's hearing, Duval owner Richard Morello said in the back of the courtroom, only saying, "Wow," in response to the city's argument. The Duval's owners will still have to go before the Miami Beach Historic Preservation Board to gain approval of what they propose to replace the structure, Seraldo said. He added that the Miami-Dade Preservation League, pending appeal, may be the only thing standing in the way of its demolition right now. At a meeting in January, Historic Preservation Board members who discussed the planned demo warned it would set a dangerous precedent for owners of historic properties who may want to force demolitions in situations where they would otherwise have to preserve the architecturally significant structures. Who would think that? I appreciate the fact that the Beatles played in the hotel in 1964, Houndsman said, referring to the Beatles' famous performance on the Ed Sullivan Show. Maybe Paul McCartney stayed in the Chaplin Towers, he added, referring to the Surfside building that collapsed in June, killing 98 people. But people deserve to be safe. And the judge stands by his conclusion that the demo in the building should come down. Now, what will be built after that? Who knows? But it's probably worth a lot more than $4 million like the family bought a few years ago. I'm for the family. Tear it down. Build something modern, safe. Go forward. Forget about the past. Not forget about it, but come on. All right. So I want to jump into this real fast. Let's talk office. Let's talk office space. It was weird because during the pandemic, everyone always questioned, everyone had to work at home, had to work remotely. What's going to happen with the office blueprint of office owners? And what percentage are people going to go back to the office? When are they going to go back to the office? How big of the office space is going to be needed? These are all the questions that brokers had, that owners had, that operators had. And this is what's on the screen right now. Make it a little bigger. Is the office analytics of South Florida. So we're including Miami-Dade, Broward County, and Miami-Dade County. And Palm Beach County, excuse me. Says that there's 241 million square feet of office. Under construction, there's 4.7 million. The vacancy rate is 10% right now. Market rent across the South Florida is at $37. That's up 4.5% year over year. Market sale price is at $304, up 7% year over year. And the market cap rate, including all classes, staying at 6.5. If we go to the KPI, key performance indicators, you'll see that currently, like I said, the vacancy is at 10%. And last year was at 10.92%. And the 10-year average is around 10%. So we're hovering just a little bit better than the 10-year average. See, net absorption, delivered. I want to look at this annual rent growth. So watch what I touch. But the annual rent growth currently year over year is 4.5%. The 10-year shows that it's at 3.9%. So we're doing better than the 10-year. Last year was only 2.2%. We're doing way double what year over year. Market rent per square foot, 10-year average was $30. We're at 37. Last year was 35, right around 36. That's where you're getting that 4.5 boost. And the cap rate and also market sale price per square foot, 10-year average was at 246. We're at $300, just above $300 at 304. And last year was at a $284 a square foot. Market cap rate, 10-year average, 6.72. This year, 6.53. Slightly superior above the 6.66% of last year. And then the last one, which is very interesting, 12-month sales volume. Last year, 2.6 billion. This year, 5.8 billion. That's double the sales volume in the office sector. So when everyone had all the questions of what's going to happen with office looks like it's on fire in South Florida. So coming to my last article, which states Real Estate Roundup. This is from the South Florida Business Journal. Miami Beach to discuss Lincoln Road offices with developers. So Lincoln Road is located on what we call South Beach here in Miami. And they're looking to build more office. They're building an office in West Palm Beach. They're building office in Broward. And they're building office on Miami Beach. This says the Miami Beach City Commission will move forward on negotiations with two development teams vying to construct Class A office projects on city-owned parking lots near Lincoln Road. That's always interesting to me because, so I guess we don't need the parking anymore, or I know that they're going to build on top of the parking, so hopefully they keep some public parking for the people and not just do away with it, and the city just makes money off of the public-private combination of the investment. So let's read on. One of the teams, which includes Miami Beach-based Starwood Capital Group and Miami-based Integra Investments, was chosen as the preferred group to construct a commercial building with approximately 100,000 square feet of office space, 23,000 square foot of retail, and 400 space parking garage. Yeah, it doesn't say. That's interesting because it says how many parking. Oh, so it's 427 parking garage on a pair of city-owned parking lots with 192 spaces. On a pair of city-owned parking lots of 192 spaces. So I guess it is more, it's like tripling the parking spaces. Those lots are a lot 25 at 17th Street. That's regardless. The project will take about 1.5 years and 147 million to complete. TPC development comprising of Coral Gables-based Pebbles Corp, which is Scott Robbins, former Miami Beach Mayor Philip Levine, was selected as the other preferred team to build a mixed-use project at 151 space parking garage at 1664 Meridian Ave. That project will include 77,000 square feet of offices, 9,000 square feet of retail, 43 residential units, and a 288 space parking lot. It would take about 2 years and 117 million to complete. Within a year, the city will discuss negotiating with the TPC development to replace the parking garage. That team proposed a mixed-use project with 180,000 square feet of office, 54,000 square feet of retail, and 1,700 spaces. A lot more spaces for the public and the private. 74 residential units. Project concepts came in response to a request for a proposal from Miami Beach officials seeking developers for 3 city-owned parking lots at the 17th Street parking garage. Miami Beach officials see the development of Class A office buildings as a way to encourage more financial services and tech companies to relocate to the city and diversify its economy behind tourism and nightlife. And I agree. Build it and they will come. And they ask, what happened to office? Well, we're building it for you. Tech. Miami, what is this? The South, the Wall Street of the South, the tech hub, crypto hub, everything's leading to Miami. It's good. I love it. March 7th, 2022. Everybody have a beautiful Monday. Don't work too hard. Be great. Love your family. See you tomorrow. David Magard, Property Value. Good day.